Welcome back to your On-Chain Journal weekly news recap. My name is Gab and we are covering the most important stories of the past week, the 24th till the 30th of June. That said, a lot has happened last week, so let's dive right in. Beginning of last week, Mt. Gox's trustee announced that repayments in Bitcoin and Bitcoin Cash will begin in July 2024. The failed exchange will repay creditors 142,000 Bitcoin and 143,000 Bitcoin Cash and 69 billion yen, nearly a decade after its collapse. The repayments will be carried out in collaboration with crypto exchanges, ensuring safe and compliant transactions. However, the speed of these repayments and their immediate market impact remain unclear. Following the announcement, Bitcoin's price declined by nearly 3%, trading at $62,440 US. Mt. Gox, once the largest Bitcoin exchange, went bankrupt in 2014 after losing 850,000 Bitcoin, primarily due to theft from its hot wallets over several years. With that said, traders do believe the concerns about massive sell-off from Mt. Gox's Bitcoin repayments are overblown. They suggest that most of the distributed Bitcoin will likely be held to creditors due to their low-cost basis, which eased the fears of immediate market impact. Solana is currently on fire and there is no week without an announcement. And this week, for one, Solana is introducing new tools, actions and blinks developed with Dialect to enable crypto trading directly on websites and social media platforms. These features aim to make meme coins and blockchain trends more accessible. Actions allow on-chain transactions via social media, websites and QR codes integrated with Solana wallets like Phantom and Backpack. Blinks, blockchain links, let users share and interact with these actions easily across platforms. How about that? Now you don't need to be careful about scam ads, you also need to be careful about rug pulls on X directly. But there is more Solana news, namely VanEck has filed for the first US Solana ETF with the SEC, announced by Matthew Siegel, head of digital asset research, on June 27. VanEck aims to leverage Solana's scalability, speed and low transaction costs. Following the announcement, SOL's price rose by 6.9%. VanEck highlights Solana's ability to handle thousands of transactions per second with minimal fees and its advanced security, combining proof of history and proof of stake. A few days after VanEck's announcement, also 21 Shares announced Solana Spot ETF following the footsteps of VanEck. Of course, nearly all of us are here for the big gains. So looking back at the first half of 2024, where could you make the most money? Well, it turns out the most profitable crypto sectors in the first half of 2024 were, surprise, surprise, meme coins with 1,834% in returns, and real world assets tokenization, which returned 240%. AI blockchain projects saw 72% returns, while DePIN had 59% returns. Bitcoin and Ether performed well with year-to-date gains of 45% and 50% respectively. Layer 1 platforms averaged 43% returns, while blockchain gaming and DeFi lagged a bit behind, showing 19% and 3% returns. However, for Layer 2 platforms, it was more difficult. They experienced losses of around 41%. If you want to stay on top of the narratives yourself, we will share a link down in the description below where you can see a dashboard with all the narratives listed. And by the way, do me a favor and don't blindly jump into the next meme coin and do your own research. Okay, so not only Solana is a lot in the news lately, also Dune continues its hype. Last week, the exchange Bitget has launched a $20 million Dune ecosystem fund in partnership with Foresight Ventures to support early stage projects on the open network, which, if you didn't know, is integrated with Telegram. The fund development aims to boost project development and provide liquidity on the Bitget platform. Overall, the Dune ecosystem has seen rapid growth in 2024, driven by Telegram's 900 million monthly active users, increasing active addresses, and fivefold rise in total value locked to 600 million. Dune coin has also hit all-time highs, returning over 400% since start of the year. Bitget's initiative, including its non-custodial wallet and Telegram Signal bot, aims to drive mass crypto adoption by enhancing the Ton ecosystem. Bitget CEO Gary Chen emphasizes Ton's potential to create a more equitable future and improve user experience. By the way, next week we'll do a little deep dive into Ton, the open network, so make sure to subscribe to our channel to not miss out on the newest videos. It's been a tough couple of weeks for the SEC after basically getting told off by the US government and everyone else, it seemed. Now another entity is jumping on the bandwagon. Coinbase has filed lawsuits against the SEC and FDIC in a Washington, D.C. district court, aiming to access documents that reveal the regulator's approach to crypto regulation and alleged pressure on banks to deny crypto firms access to the federal banking system. The lawsuits seek records from SEC investigations into crypto firms from 2018 to 2024 and memos from the FDIC instructing banks to pause crypto operations. Coinbase accuses both agencies of violating the Freedom of Information Act by denying access to these documents. Coinbase alleges that the SEC and FDIC are deliberately repressing the crypto market's growth and demands transparency in crypto regulation. The exchange also supports pro-crypto politicians ahead of the US elections to secure regulatory clarity. But that's not all when it comes down to the SEC. In fact, they are trying to show some signs of still being alive. The SEC has sued Consensys, alleging that MetaMask swaps and staking services acted as unregistered broker and violated federal securities laws. The lawsuit also targets Ethereum staking services Lido and Rocket Pool, suggesting their staking tokens are unregistered securities as well. MetaMask, widely used for Ethereum and other blockchains, facilitated over 36 million transactions in 4 years, with at least 5 million involving alleged crypto asset securities. The SEC claims these include tokens like Matic and Sand, among others. Consensys, led by Ethereum co-founder Joe Lubin, plans to contest the SEC's claims, arguing the regulatory body is overreaching. And one more thing around the SEC, apparently they are close to approving Ethereum spot ETFs, potentially by July the 4th, with asset managers like BlackRock and Grayscale nearing final stages of regulatory discussions. Minor issues remain, but approval is expected within a week or two. Executives from involved firms have reported significant progress in document tweaks, aligning with Bloomberg analyst Eric Balchuna's prediction of approval by early July. SEC Chair Gary Gensler has been optimistic but provided no specific timeline. Bitwise predicts that spot Ethereum ETFs could attract over 15 billion in net inflows within 18 months based on Bitcoin ETF data and Ethereum's market size. Currently, Ethereum's market cap is 432 billion compared to Bitcoin's 1.26 trillion US dollars. It hasn't been an easy couple of weeks in the market, with Bitcoin overall seeing some downturn, countries like Germany or the US selling off some Bitcoin. On Thursday though, 11 spot Bitcoin ETFs in the US recorded net inflows of 11.8 million US dollars, marking 3 consecutive days of positive inflows. Bitwise's BitB received 8 million and Fidelity's FBTC saw about 7 million in net inflows. Meanwhile, BlackRock's IBIT, the largest by net asset value, reported 0 inflows for the 5th consecutive day. Despite 520 million worth of trading, 11.5 million of Grayscale's GBTC was withdrawn. We shall see how this further develops. Lastly, we wanted to share some news from the airdrop front. At first it looked like it could be a positive airdrop for once, but now things are overall kind of mixed feelings. So what exactly happens? Blast had its airdrop last week. We reported about that on our X. And what is Blast? Blast is an Ethereum L2 that managed to create some hype around the airdrop. Just before the airdrop, it was revealed how the airdrop would look like, and overall it seemed very positively perceived. The highly anticipated Blast airdrop went live, distributing 354 million worth of Blast tokens to its users. However, the launch price and fully diluted market cap of the token was lower than expected. On top of that, many quickly sold their tokens, causing the price to drop and resulting in disappointment among users who expected larger gains. Users' disappointment was fueled by high expectations based on the popularity of the Blast network among crypto whales and the substantial sums collected during the airdrop of Blast's predecessor, Blur. Initial sell-off further plunged the token's price. Despite the negative reactions, some stakeholders still defended the airdrop. They noted that while many users sold their tokens, whales remained committed. Blast's price briefly rebounded but settled around 2 cents, which is below early expectations. That's it with our recap of last week's news. What do you think of the hype around Solana and Ton at the moment? If you found this helpful, please make sure to hit that subscribe button and notification bell down below for more updates like this. Thanks for watching, and I'll see you next week.